Silver finished the week up more than 10%. Oil is rising again, and the weekend brought an additional risk variable with the Iran situation, which could push markets into a volatile open on Monday. In this video, I'll keep this tight and practical. What moved, what may be temporary, and what to watch next week. Welcome to Money and Power. Here are the key numbers from the week. Gold closed around $5,280. Silver ended near $94 at $93.84, up roughly 10.6% on the week. Platinum closed near $2,385 and palladium around $1,839. On oil, WTI crude around $67 and Brent crude around $72.87. And the dollar index closed at 97.65. On crypto, Bitcoin was 66,400, with Ethereum near $1,984. So what's the signal? Gold holding about $5,200 and closing near $5,280 tells you gold is being treated as a strategic hold, not a one-day trade. It's firm, not euphoric. Silver is the louder move. 10% weekly gain is not background noise. Silver usually doesn't do that unless positioning changes, either because markets are leaning towards easier policy conditions ahead or because investors are seeking optionality in the metal space. Platinum moving strongly while palladium barely shifts is also worth noting. It suggests this isn't everything metal is up. It's selective, and that often points to flows rather than a single headline. Now add oil. Oil rising alongside metals matter because it affects inflation expectations and risk pricing. And with the Iran situation now in the mix, you can get a Monday gap in crude and metals that reflect fear first and information later. That's the important distinction. Early week moves can be dominated by risk premium and then corrected once the market has clarity on whether supply is actually affected. There is the rumor that OPEC could release more barrels. Whether that happens or not, the market will price the immediate risk first. Any supply response tends to come later. Now, before we go further, if you want the full weekly briefing with the deeper sequencing, what confirms, what invalidates, and how I'm reading the yield and dollar reactions, that's in this week's 2% brief. The link is in the description and pinned comments below. So now let's focus on what to watch. This week is heavy on US data. ISM manufacturing on Monday, then later in the week the ADP employment report, jobless claims, and the main employment report on Friday, including unemployment and wages. Those releases will shape expectations around rates and growth. So the practical checklist is simple. First, watch the Monday open. Does oil jump? And more importantly, does it hold into the second day? Second, watch gold and silver after the initial headlines settle. If metals hold their gains through midweek, that's usually a sign the move is supported by positioning, not just weekend risk. Third, watch the dollar. The dollar index is 97.6. In geopolitical stress, the dollar can strengthen as a defensive asset. If the dollar rises sharply while metals rise, that suggests protection mode. If the dollar stays soft, the market may be treating the risk as contained. Fourth, treat Friday's employment report as the anchor, but don't fixate on the headline number. Watch how markets react across oil, the dollar, and rates. Reaction tells you more about positioning than the data itself. If we were in a true liquidity squeeze, you'd usually see disorder across risk assets quickly. Right now, crypto is not collapsing. Bitcoin and Ethereum are still holding key levels, which suggests this is not a forced liquidation phase at the moment. It looks more like cautious repositioning. So the objective this week is not to chase gaps, it's to observe confirmation. If this kind of structured, calm analysis helps you stay positioned rather than reactive, subscribe to the channel. And for the full weekly briefing with deeper context and audio, join the 2% brief below. And if you want to connect this to the earlier liquidity shifts we've been tracking, watch the video on screen now. It links directly to what we've discussed today. Thank you for watching. Look forward to seeing you soon.